The video will explore a common scenario where you receive a check labeled as an invoice from a business. We will break down the potential tax implications, bank procedures, and the steps you should take when faced with this situation. Here is what we'll cover in this video: the scenario where a check is received as an invoice, its tax implications, the bank procedures such as holds on checks, what you can expect during the process, and some important considerations to keep in mind. Let's start with understanding the situation. You receive a check, but it's labeled as an invoice. This situation often arises when a friend sends you money, and the check comes from their business. It's important to understand this labeling might be due to business records, rather than a reflection of the transaction's nature. Ready for a quiz question? Here we go. What does the invoice label on a check usually indicate? Is it a formal business requirement, a problem with the check, or an indication of tax liability? You may pause the video now to think about the answer, and we will discuss the answer in the next section of the video. The correct answer is a formal business requirement. The invoice label is likely just a formality from the sender's business and shouldn't impact your tax liability. Moving on to tax implications. If you're receiving money as a gift, particularly for medical expenses, it's generally not taxable. However, to ensure that you're handling your finances correctly, it's always a good idea to consult a tax professional. Now let's discuss bank holds. When you deposit a check, it's standard for banks to place a hold on it, especially for larger amounts. This hold usually lasts for a few business days. The main purpose is to give the bank time to verify the available funds and prevent potential fraud. Remember, a hold doesn't automatically indicate a problem with the check. Here's what you can expect as you navigate this process. Most holds will last a few business days, and the invoice label on the check likely won't impact your tax situation. It's more of an internal note or formality from whoever issued the check. There are a few key considerations to keep in mind. First, if the check amount is substantial, verify its origin with the sender. Record keeping is essential for such transactions, and if you have any doubt about the tax implications or any other aspect, consulting a tax professional is highly recommended. Let's recap what we've discussed. First, understanding why a check might be labeled as an invoice. Second, recognizing the tax implications involved, especially with non-taxable gifts. Third, the standard procedures like bank holds. And lastly, the importance of verifying transaction sources and consulting professionals when necessary. Thank you for watching this video. We hope you found it insightful and useful. If you enjoyed the content, please hit that like button, share it with your friends, and don't forget to subscribe to our channel for more such informative content. We would love to hear your thoughts, so make sure to leave a comment below.